Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 9th of August. So we've seen one of the biggest volatile weeks of the year. We've seen currencies go berserk. The indices have gone a little bit crazy as well. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and you can see this giant wick candle that basically went all the way down to the depths of 63.5 cents in that one crazy day, and that was earlier in the week, obviously. We've seen a very, very big recovery since then. It broke through what was initially a support zone, and we saw, look, 4 days really of trading in that area before it did push up and start to test these highs again. So it's attacking that 66-cent mark, which we know is a very strong zone for a lot of reasons. We know we had a lot of support through here and quite a lot of resistance through there, especially in this area here. You can see we had nearly 3 weeks of action where it touched it every day and rejected off it. So if we are going to see a bit of a reversal of the Aussie USD, this is the area that it's more than likely going to happen because it's already got basically history there, and it's already had a very, very big run. If you look at it from the standpoint of where it's come from to where it is now, you're talking about 250 pips, which is quite a lot. Yes, it's been falling for quite some time. That was a very, very big shock move, but now we're starting to see a little bit of a recovery. But just be mindful that if you are looking at going long, at this point here, we've got resistance right in front of us and also a 50 moving average. So I'd be looking for a potential rollover at this point. If we see a series of lower highs and lower lows forming on the smaller time frames, I'd be looking at shorting it back down to around that sort of 65.50 to 65 cent mark. But of course, if it does break through this level and keeps pushing on with strength, then the 66.80 becomes the target. But really, really good trading on the Aussie. And hopefully you're able to capture some of that, because when it did eventually get back up here, the obvious place that it was going to find the next resistance was here at around that 66-cent mark. So hopefully you're able to catch a bit of that move and also some of that downward action as well. Over to the US dollar CAD, and look, this has been pretty straightforward all week. It's been basically selling off. We knew that we were at very strong resistance up here. This is why we always wait for the retest. This is why we never take the first break. We wait for it to retest and then look for a long. It didn't happen, obviously, so it saved us actually faking a breakout. Obviously news related as well. Like, look, it had the same volatility that everything else did, of course, and attempted to go longer, sorry, but now it is certainly pushing down. And, you know, we know this level here is pretty strong, right? Like, we've got that 137.30 area has many, many touches right through this zone here. So although the 137 is strong, the 137.30 is actually quite, it's probably an even stronger area, really, to be truthful, than the 137 round number anyway. So you can see here all of the touches through there where the price stopped. This is where I would be looking for a potential support zone. If we see a little bit of support around this area here, we've got a 50 moving average and a very strong support level to catch us. So look for a series of lower highs and lower lows. And if we get that, we're able to look for long opportunities back up to that 138.50-ish area. So about 150 pips from here. But even though it has been selling off, it's been coming down in a very nice manner. You can see on a 15-minute chart all the way through, lower highs and lower lows, the things we talk about all the way through, all the way down to these lows. So it's been very, very well behaved and very, very easy to trade from that standpoint, from a scalping standpoint. All right, over to the US dollar yen. This has been, you know, an absolute shocker. It's recovered quite a bit. It's already up at around that sort of 147.50-ish area. There is a bit of resistance at this point though, but it's broken through so many different zones, and it's going to find resistance at quite a few places now. You know, we can see some here at 148.5, and then we're going to see the next one at around this 150.5, and of course the 152. So all of those levels are potential targets. You've got to be very, very careful with the US dollar yen. Okay, it is moving extraordinarily fast and with a great deal of volatility. So if you are going to trade this one, be very, very careful with where you place your stop losses, because when it does start to move, it moves very quickly. This could roll over at any of these resistance points. Okay, so just be really, really mindful of it when you are trading it, that it can roll over and punish you, because I think a pullback to a 20 moving average is likely. And that'll be around that sort of probably 150-ish area, which would be a great trade at that point there. If it got to there without a lot of trouble, that's where I'd be looking for the real reversal. So look for, you know, both longs and shorts on it, but keep your stop losses relatively tight and your risk management really, really good on this one, because it is very, very volatile. All right, over to the dollar index. And yeah, another big sell-off, obviously broke a very, very key zone last week. And you can see we've been trying to trace back up this week. We got to the 103.50, but it did also get down to a low of 102.18. So it was a very, very wide trading week for it. We've got a very big series of lower highs and lower lows now, and any move up is going to be met with quite a bit of resistance. We've got quite a bit of resistance at 103.50. A 20 moving average is starting to bear down on it now. So it's difficult to see and make a case for a good long opportunity on the dollar index at the moment. And of course, the euro is the one we're going to be wanting to trade here. So we'll jump into it in a second. But really, what I'm probably looking for is a bit of a rollover around that zone. If we see a bit of market action back up to around that 103.80 area, 103.60 to 103.80, especially if the 20 moving average catches up, we'd be looking for that potential rollover and then, yeah, push down to the levels that have already been tested around the sort of 102.50 area. So really good trading on it. But the euro, of course, is the one that you would have been able to get. It hit the 110 right on that candle there. It's been a little bit weaker, but very, very mixed. You can see here that this is a very strange week for it, right? Like you've got doji candles everywhere, two fully fledged doji candles with big ranges that actually literally opened and closed at the exact same point or as close as you're going to get. Very rare that happens. And then, yeah, and you've also got a weak candle there. So very hard to read what's going on with the Euro USD on this week's action. But it did, yeah, in the peak of the volatility, hit the 110, which is the target that we were looking for. And it came all the way back down to the support at 108.80 as well. So I would be trading just inside this range. If you're looking for trades on the euro, look for opportunities inside the 108.80 and the 110. I'd be looking and keeping those trades relatively sharp. Probably even the 110 might be a bit of a stretch. I'd be probably maybe making it a little bit more tight, probably 109.50 to 108.80. I'd be scalping inside this zone. And if we get a daily close above the 109.50, then I'd be looking at moves back up to the 110. But that would be a separate trade. I wouldn't be doing that from this point here. I'd be looking for a daily close above both these, above this green line here at 109.50. Or below the 108.80 and below the 20 moving average, at which point we'd be looking for moves down to the 108. So really purely scalping on the euro. And the star of the show, or one of the stars of the show from an industry standpoint, was the big fall on the S&P 500, of course. And look, it reached a ridiculous low of, 50, basically 50.94 the week. Very, very big, heavy selling right through here. It's made somewhat of a recovery. It had two attempts to go up and failed both times, as you can see through here. But it has actually made a pretty decent recovery in yesterday's session. Today's trading relatively flat, of course, but it's in the afternoon in Australia. So the next session in America is going to be a very, very interesting one. Depending on where we open up on Monday is going to be the catalyst of where the momentum is probably going to shift here. I would be looking at two things. I would say if we get a close above the 53.50 on a daily on Monday. So if the daily closes tomorrow and we wake up on Monday morning and the trades are above 53.50, I'd be looking for moves up to the 20 moving average to the 54 and 54.50. They're the two moves that I'd be looking for early next week. But if we get a daily close below 53.30, especially if it's below 52.80, then I'd be looking for shorting opportunities back to these lows again, because that would signify probably what's going to be a relatively weak sentiment to the market starting out on Monday and Tuesday. So really, depending on where we close the US session tomorrow, is going to be the catalyst for which momentum shift we're going to take. If we get a close above 53, if we go basically above this 53.50, we'd be looking for moves up to the 54 and 54.50 mark early in the week. But of course, again, if we close below 52.80, and that's where we're trading on Monday, I'd be looking at moves back down to that sort of 50.80 that tested it at the start of the week. So that would be the way I would play this one early into next week. But we'll have to give it one more day, let the week finish up, and we'll see where the momentum shifts. Hopefully you've had a great week's trading. I know it's been very volatile, but a lot of levels were hit and the markets did behave themselves. So hopefully you were able to take advantage of some of those. The volatility is still around, so just be sure to keep your stop losses relatively tight and your risk management up to scratch to make sure that you don't get caught in any sort of pain. Have a great weekend. I look forward to seeing you all next week.